The Biden administration is looking to impose a punitive tax on crypto mining operations for the, quote, harms they impose on society, according to an online post from the White House Council of Economic Advisors. Joining us now to discuss that is Marathon Digital Holdings CEO Fred Thiel. Welcome, Fred.
Thank you. Good to be here.
Good to have you. So, the administration's blog entry made the case for a U.S. tax equal to 30% of a mining firm's energy costs. What's your reaction to that proposal?
Gosh, we mostly don't have enough time for me to go over all the important points, but think of it this way: Bitcoin miners use less than a fraction of a percent of energy generated in the world. And the bulk of the energy we use is renewable. And what the White House is using here as a cover for this is, well, we want to make sure that we get to net zero. It's important for the climate. Well, there are a lot of things that use a lot more energy than 0.1%, right? And then the other thing to really think about is a lot of the renewable energy in the US today is starting to get backlogged because there's lack of interconnect. So, you have a wind farm or a solar farm, and you need to connect it to the grid so consumers can get access to the energy. There is a 2-year backlog on transmission today for renewable projects, which means if I invest $500 million to build a solar farm, I won't be able to get that online for minimally 2 years. And guess what? This backlog is growing every day. And by an estimate that Princeton University did, which was published in a Bloomberg article late last year, the U.S. needs to spend nearly $2 trillion by 2050 to build out the transmission grid if it has any hope of getting to net zero. Not alone think about the impact of EVs, electric vehicles, on the grid. EVs are not very clean when you think about it. Look at the batteries and what building those batteries and eventually, hopefully, recycling those batteries. There's a lot of damage that these alternative technologies could cause. And Bitcoin is this little tiny speck when you look at the energy consumption. So I think this is really just a camouflaged way of saying we want to get rid of Bitcoin, we want to get rid of crypto. The other thing is Bitcoin miners are the users of energy of last resort, meaning you put a 30% tax on energy, Bitcoin miners will likely move offshore, which is really most probably what the White House wants. They really just want to get rid of crypto in this country. And I think, this is very much like, go back to the early days of the internet. Oh my God, this is a bad thing. We don't want it. Luckily, sounder minds prevailed. And today, the U.S. is the leader in the internet. I think if you look at what's going on in Europe, the UK, you look at Switzerland, you look at Singapore, you look at Hong Kong, even Bermuda and the Bahamas now are putting very well-structured regulatory frameworks in place that embrace crypto and allow people to leverage it. And I think the U.S. is really losing out here. And again, we hope sounder minds prevail, but we're already focused on diversification. We're building one of the largest data centers in the Middle East and UAE together with our partners there. We're evaluating other options offshore. But realize that in the US, we sit predominantly behind the meter at renewable farms where there's either wind, predominantly wind in our case, and we act as an energy consumer when that generator can't sell the energy to the grid. So if they can't sell it to the grid, what are they going to do? Just lose money? And if they lose money, then they have to charge consumers more. So in reality, Bitcoin miners act as essentially a revenue stream, like an anchor tenant for a real estate mall developer that consumes energy when others can't and won't. And therefore, we provide revenue streams and profits to these developers of solar and wind farms so that they can operate successfully and not have to charge consumers high prices. One last thing I would mention is that energy is priced negatively in this country, and this is a study that was done last year, 200 million times last year. 5-minute increments, energy was priced negatively, meaning there is too much energy, meaning they generated more than the grid could take. If that's the nature of the market, why are you going to apply an excise tax to miners? Again, it doesn't make logical sense, and I really think this is just a camouflaged attempt at getting rid of the industry.
Yeah, it's interesting that you bring up offshoring, Fred, because in Texas, even there's a bill that's in the Senate, I believe, the Texas Senate, or has already passed the Texas Senate, that is trying to put a cap on demand response programs for crypto miners and Bitcoin miners specifically. Do you think that is something that will actually pass? Because to me, as someone who wants miners to stay in the United States as an American, it does seem a little bit nonsensical to say that demand response programs are bad when it's something that feels like it's good.
Yeah, the Charlie Munger famously said, look at who benefits from incentives, and you'll see kind of what people's agenda is here. So SB 1751, which is the proposed law you're talking about, essentially caps Bitcoin miners' potential participation in demand response programs at 10%. Well, the ERCOT grid loves Bitcoin miners because we can shed our load up to 99% of our load in 10 minutes, which is perfect for the grid response. And, today there was an article published in one of the media outlets talking about, this summer there's an expectation that the Texas grid is going to use record amounts of energy. If you read a little bit further down, it says, oh, by the way, they have more than enough generation capacity. And the fact that they have large interruptible load, meaning Bitcoin miners, they can shed load whenever the grid is going to need it. And they don't expect, unless there are unforeseen generation, problems, that there's going to be an issue with this. And that's thanks to this large interruptible load that we provide. So 1751 will likely not pass. I think the people really behind it are a combination of the people who really want to have battery storage technology for renewables and the other participants in demand response who can only shed 30% of their load. And Texas is a unique market. It's like an auction where ERCOT says, hey, I need you to shed load, and then whoever does it fastest gets it. And I think this is just a question of somebody wanting more of that money and trying to create a legal reason for Bitcoin miners not to be able to participate.
Okay, very briefly, Fred, I have one very quick question for you. Public mining stocks got hammered when Bitcoin got hammered, but to a worse degree. Do you think that going forward, that's going to stop, where the Bitcoin mining stocks move more than Bitcoin itself does? Just very briefly, we have 30 seconds.
Yeah. So if you just look at today, for example, look at any day when Bitcoin moves. Typically, Bitcoin miners move 2 to 3 times as much, whether it's up or down. And I think you've seen year to date, Bitcoin miners have moved more than Bitcoin has. So that's a good indicator.
Sure, that sounds great. Fred, thanks for joining us. That's all the time we have today.
Thanks.
That was Marathon Digital Holdings CEO Fred Thiel.